Thank you very much. Thank you again for inviting us. Before actually starting, I want to spend 1 or 2, maybe 30 seconds on the African Development Bank, because, in the introduction, I was put on the spot, and then I thought maybe it's good to share 30 seconds on the African Development Bank. The African Development Bank is like a regional development bank. We have lending and soft loans facilities, and what makes us African is that we only focus on Africa in our loans. So I think that's a little bit we don't always have such a strong brand name as other regional development banks, but I just wanted to say that up front. Now, there are a few issues which came up, and I don't want to repeat my previous speakers. Of course, the African Development Bank is very happy to participate, but this is basically an EU discussion, and we don't directly have a mandate to discuss, of course, EU reforms, which is, of course, quite logical. So I'll focus my intervention a little bit on the global financial crisis, a little bit on how the scene is changing in Africa, and also a little bit from, I would say, light observations on aid effectiveness. On the financial crisis, I think our keynote speaker gave a very interesting first round effect. They're now focusing on the second round effects, which of course includes problems of trade financing and bank and liquidity shortages. And we see that in African Development Bank, because we see countries coming now us for loans, which previously did not come for us loans. We have Botswana coming for a 1 billion loan because private sector has withdrawn. We see South Africa coming to us with also for 1.5 billion loans. Mauritius is the same. So you really see, from our point of view, the liquidity issues is a very serious issue. And what I would like to highlight, although we don't know exactly how this financial crisis is going to unfold, is that in the stimulus packages and the bank rescue packages, some countries have a tendency to include clauses that taxpayers' monies for Britain should be, or not Britain, taxpayers' monies of a national country should be used to save banks, should not go to African or to other banking structures, which of course in the financial market is really difficult because banks flows everywhere. For Africa, that's sometimes a very negative effect because, we are basically, problems are caused in other capitals and money is withdrawn from Africa. So I think that's maybe one of the issues when it comes to the impact of bank recapitalizations. That's one of the things I wanted to say. I wanted to a little bit highlight as well as that the bank is also focusing on that, and we created a trade and liquidity finance facility. And this comes to my second point, a little bit of restructuring the global, in the follow-up to the G20 discussions, restructuring the global governance. I think the first speaker talked about transnational nature. The second speaker used the word, I think, multilateralism. And I want to take it a little bit further, because sometimes when people talk about these things, people say, oh, we have the G20. And the reason, first it was a G8, and now it's a G20 because now we have these emerging donors which are really big with foreign currency reserves, and we actually need them. And then people say sometimes to Africa, you have trade flows of maybe 4%, or how do you call it, financial flows of maybe 6%. So it's difficult for us to participate. But it's like the impact is very often on Africa, like on climate change. It's on Africa. We're talking about financial banking regulations, even though I'm not talking about recapitalization, but in the context of a renegotiation of Basel III Accords. If you have some regulations, it can also have a direct impact on private banking capital flows to Africa. Again, so I would say the right of Africa participation is based on the fact that it impacts our development prosperities and prospects. So I think that's maybe one of the things that I wanted to say, and I don't want to take too much time. So I'm going to limit myself to just 2 very short points. One is the shifting aid architecture in Africa. I think we have, we have, of course, in emerging countries, including China. And for the African Development Bank, we don't exactly, to be honest, know how to react. Because on the one hand, they're our competitor, they provide loans. On the other hand, they provide additional resources. So I'm not saying that we always have the answer, we don't. But what I do wanted to say that they're there. Their trade is now 106 billion last year. Compared, which is the third biggest trading partner in Africa. The first one is the US, the second one is the EU. The US has like 133 billion. So I mean, they're already coming in the league, although of course they're very much focused in this narrow area of resources and infrastructure. But you know, they are definitely going to change, and maybe in the discussions on how the EU wants to formulate their agenda, I think that's maybe an issue that they should consider. Final point is, you know, of course, like I said, we don't have a direct mandate to discuss EU internal workings, and I would put this on the heading as light observations. How do you call it? The only way of how we would see it is, of course, we would change the picture around and say, I don't know if this is an English expression, but put the horse in front of the cart. But like, you should first have effectiveness and efficiencies, and then you should see at how the structure should be. And sometimes I have the impression also in the discussion is the other way around. There's an impression sometimes I have as an external person that people are looking at the process and make it legitimate. But I think effectiveness is one of the key issues. And I think for that, as the keynote speaker, you need delegation of authorities to country offices, because what is actually needed, and it's there in the Paris Declaration, is there in the Accra Agenda, the AAA, is of course national leadership, national ownership, and without delegation of authority, it would be much more difficult. So I think I wanted to emphasize to be more efficient and effective, which is also one of the main goals of course, the EU architecture, is of course delegation of authority and capacity at local levels, so that it's also the case with, it can align with other partners, including the World Bank, and not only within the EU, African Development Bank, Australia, USAID if possible. So I think I'll leave it at that. And I wish to thank again the speaker for inviting us.
Just to say and to reassure you, Richard, that